Welcome to WSJ Live. It is Jobs Tuesday, which some of you may know is a little bit strange. We'll explain coming up, but first, I'm Shelby Holliday, and I'd love to welcome my colleagues here, Ashby Jones, Wall Street Journal's Deputy Economics Editor, and Gunjan Banerjee, Wall Street Journal's Lead Markets Writer. Thank you guys so much for being here. It's great to start the day with you.
Thank you, Shelby.
Thanks for having us.
So we're expecting some job numbers to drop in just a few minutes, and we'll get to those live. But first, I would love to throw some subscriber questions your way. We've had some really smart questions come in. And Ashby, I'll start with you. Can you just explain why this is such an unusual jobs report, why it's coming on a Tuesday, and then also a subscriber wants to know, can it be trusted?
Good questions. The first one first. So it's coming on a Tuesday. So forever, jobs come on Friday. The first Friday of every month. You can set your watch by it. It's been this way for forever and ever and ever. This one is different because of the government shutdown. The Bureau of Labor Statistics, the agency that handles all of this stuff, was shut down for a month and a half. So They are now sort of back at it, compiling all the data, and they didn't put in an announcement about why it was coming on a Tuesday, but my assumption is that this was just the first day they could get it done. Everybody's been waiting for these numbers with bated breath for a long time.
Okay.
As to whether or not they can be trusted, I think the answer is a qualified yes. I think as much as they could have been trusted before the shutdown. The Bureau of Labor Statistics is working with imprecise data, but I don't think anything really nefarious is going on. I think you should look at these numbers and view them sort of as like, get a sense as to what direction the economy and the job situation is moving, rather than zeroing in on the actual precise numbers. So that's where I think we're headed.
Gunjan, you're nodding in agreement. You agree?
I do. I will say, though, every trader I have been chatting with over the past week has been pointing to Fed Chair Powell's comments on this, where he said there's been a systematic overcount in the jobs numbers, saying that the jobs numbers could be overstated by as much as 60,000 jobs a month. So I think everyone is walking into this jobs report thinking about that and wondering, hey, is this going to be overstated again? What do the revisions for the prior month look like? So that's one big thing to watch.
I see. So not necessarily specific to this report, but just in general, a systematic overcount.
Yes, and the Federal Reserve Chair is saying, hey, this is going on. Take these with a grain of salt.
Interesting. Okay, here's another good question. Should markets rely so much on the jobs report? There's been a lot of large revisions to the monthly data, which you just touched on. Gunjan, what do you think? Are markets relying too much on these numbers?
Look, traders, analysts, economists, financial media, we track this number incredibly closely. Despite its flaws, this is still one of the best reads that we have on the U.S. economy right now. And as Ashby said, the trend is super interesting to watch. I will say, though, this is not a real-time indicator. Most economic indicators just aren't. This is backwards-looking data, and especially this month.
AI looms large over a lot of economic data these days. Ashby, here's a good question. Carrie says, they're a scientist struggling to find work. Is it too soon to blame artificial intelligence?
It's a really good question. This is the $64,000 question. What is AI going to do to the job market? I think what we've seen so far is that companies and organizations aren't so much laying people off because they're being replaced by AI, but they're taking more of a sort of let's pause and see, and let's maybe not do as much hiring on the front end and see if we can sort of, fill the gaps, so to speak, with AI for now. But is all of this going to change into 2026 and 2027? That is the expectation. Whether and to what degree it happens, is anybody's guess. We're just going to have to stay tuned and watch.
And can we just talk about the numbers for October? We're going to get a November number, but we're only getting part of October. Is that right? And why is that? Do either of you want to answer that?
Yeah, basically the BLS, again, the agency that does these surveys where they get the numbers, they do two surveys. And for October, they were unable to go back and redo what's called the household survey, where they actually go out and interview people in their homes and try to get a sense as to what, whether they're working and what their hours are like, et cetera. They just decided, it's going to be enough work to do it in November, and to go back and ask people to sort of recreate where they were in September, October, it doesn't make a lot of sense. So they left that one behind, but they did do the other survey, which was to survey businesses across the country to get a sense of what their payrolls look like. So we will get a jobs number, but we won't get the unemployment rate for October, which is the number the household survey yields.
And this is really, really weird. This is the first time in 80 years, right? We're not getting this number for a month. So this is a really, really unusual jobs report that we're looking at this morning.
And before they come in, how much can we attribute this number to the shutdown in terms of the actual number of jobs? Will that play a big factor?
The shutdown will be weighing on these numbers, and that's another thing that looms over this jobs report for sure.
Interesting. Of course, the Fed is always watching these numbers. And here they come in. This is the number for November. The economy added 64,000 jobs. That is higher than expectations, which were around 40,000. Ashby, what's your reaction to this number? What do you think it means for the market?
I'll leave the market questions for Gunjan, the market expert. But in terms of expectations, I think this is a pretty good number. It's not great. It's certainly not awful. Expectations for this report were all over the map. They ran from like 10,000 jobs added. Some people even thought we might have job losses in November to 100,000 added. So it was a really, really wide range. And so I think that nothing within that range is surprising. This is a pretty solid number. It's not great. It's not awful. But it kind of hits the mark, and I think tells us that that the job situation hasn't fallen off a cliff, and that was the big fear from a lot of people heading into this jobs report.
This report, okay, so not terrible. How are the markets reacting?
You know, one thing that really sticks out to me is we saw stock futures across the board for all four major indexes turn higher after the report. But the one index that I'm watching is actually the Russell 2000 index of small companies. So these are the smallest companies in the US, and they tend to be the most sensitive to the economy and the economy's ups and downs, and that is outperforming this morning.
Interesting.
So you're seeing the Russell 2000 futures outperform futures tied to the NASDAQ. So the NVIDIAs, Amazons, Googles of the world. You're seeing those small companies race past them, which tells you that a lot of traders are viewing this report as pretty positive for the economy, at least to start.
And let's talk about unemployment rate for November. That came in at 4.6%. That is roughly in line with expectations, right, Ashby?
It is. It's a little hotter than I think the expectations were around 4.5. 4.6 is I think the really worst case scenario would have been a 4.7. 4.6 is not great. It's not terrible. But I think if you look at the 64,000 number is a little bit better than expected. The 4.6 is maybe a little bit worse than expected. So taken together, it's not an awful report, but it's certainly not a great report either. It's somewhere right in this mushy middle, which frankly, Shelby, is like where we've been with jobs for the past 6 months. It's just been a mushy middle. Nobody can make sense of what direction we're heading in. And we'll have to dig into the numbers later, but based on these two numbers, I'd say we're getting sort of more of the same, more mushy oatmeal here.
Yeah, and at least so far, I think earlier this year, so many economists, traders, investors were bracing for this doomsday tariff scenario after President Trump put on these tariffs, and that just has not happened yet. We're nearing the end of 2025, and the economy is still holding up, and at least, early in the day, it seems like that's the case with this recent jobs report.
And to Ashby's point, you just can't really tell which way it's going, which is so interesting. Are you seeing anything in market reaction that you think is a response to the unemployment number?
We're seeing 10-year Treasury yields kind of hold steady, 2-year Treasury yields, and those are the most sensitive to interest rate expectations. They've taken a pretty big drop. So that's interesting. I think this kind of reinforces investors' views of Fed rate cuts next year, which has been a key factor driving the market rally recently.
Let's get to another subscriber question. One subscriber wants to know whether the current labor market weakness is a temporary thing caused by uncertainty or a more serious structural problem. You want to take a stab at that?
Sure. I mean, that, again, is the huge looming question here, right? What is going on with the labor market? And we've been, again, in this mushy middle for a long time. My response is that it's more of a cyclical problem than it is a structural problem at this point. We had a lot of hiring after the pandemic, a ton, and I think a lot of people think that we're just kind of coming down, easing down from that a little bit. But again, the big question is what happens in 2026, and the big looming question is one you've already alluded to, Shelby, is AI. To what degree is that going to really remake the U.S. economy and really bring about the structural changes that you mentioned?
AI and the Fed, right?
Yes, and I do want to flag one really key data point in this morning's report, which is a big downward revision in the October number. We saw it revised downwards by around 100,000 jobs. That's exactly what we were talking about ahead of this report, and is likely what's driving the Treasury market this morning.
That actually tees up the next question from a subscriber. This person wants to know about political bias when it comes to economic sentiment, declining economic sentiment. Are things that dire, or is this sentiment driven by political leanings?
I think more so than ever, you are seeing political leanings drive how people spend, how they feel about the economy. And one really surprising revelation for me this year was how they invest. Investors I was chatting with, depending on how they viewed Trump's tariffs, they were moving their portfolios around based on that. I'm sure you've seen this on the economy side, Ashby.
Yeah, I mean, it's totally right, Gunjan. I mean, we track these consumer sentiment metrics every month, every 2 weeks or so, and they've been really, really, really negative. But they are really split by political party. Right now, Republicans are fairly happy with the economy, and Democrats are, think it's the worst economy ever. Not surprisingly, maybe when Biden was president, it was flipped, even though the economy really wasn't all that much different than it is now. So political sentiment is driving a lot of broader consumer sentiment. So it's really hard to make sense of just what folks are thinking about the economy.
And there's another interesting dynamic at play, at least in the markets recently. And President Trump talked about this, where good news for the economy is often viewed as bad news for the markets and vice versa. So, even with this downwards revision, I think some investors might be looking for a little bit of good news there. What does that mean for the Fed? Does that mean that they lower interest rates even more than expected?
Right.
Last quick question before we wrap. What's next for you guys? What are you looking for next? Data, meetings, comments?
Yeah, I mean, for me, the Fed is sort of out of my mind right now because they don't meet until later next month. So, and they'll have a lot more data to take in before they have to make any decisions on another rate cut. Inflation is Thursday. That's the next big thing we're gonna be looking at. To what degree does inflation inch up? The expectations are that it will inch up a tiny bit. This is something that a lot of people are talking about: affordability, right? Affordability. And inflation is definitely a part of that. So that'll be something that I'm paying close attention to.
Any final thoughts for you, Gunjan?
I'll be watching the market move over the next hour and throughout the day. I mean, we're already seeing some of the early rally in the NASDAQ and the S&P 500 futures fizzle a little bit. And a lot of these early moves can be driven by systematic investors who make buying and selling decisions based on factors like momentum, volatility. They can be short-lived. So I'll be watching to see if this move holds up throughout the end of the trading day.
All right, Ashby, Gunjan, thank you so much for joining us. It's so fun to spend my morning with you, sharp colleagues. To our subscribers, thank you for sending in questions. Thanks for tuning in, and we hope to see you again next time. Have a good one.